Welcome back to the hot seat. Delighted to be joined today by a friend of PCD, Hugh Wade-Jones from Enness.
Hi, David.
How are you doing?
Yeah, well, thank you. Good.
Thanks for joining us. For those of you for those of our members who haven't come across Enness Group, I'd be amazed about that, given the business we've done over the years. But if there are any of those out there, please do give a brief introduction to yourself and the business. It'd be great to hear it.
Yeah, thank you, David. So my name's Hugh Wade-Jones. As David mentioned, I'm the managing director and founder of Enness. We are mortgage brokers for high net worth and ultra high net worth individuals. We have grown over our 13 and a half years from what was myself and Isla, who obviously you know very well, David, to a team of about 35 people now. And we have offices London, Monaco, where I'm based myself, in Jersey, in Dubai. We're in the final stages of opening an office in Geneva. Hopefully we'll get confirmation of that in the next week or so, as well as having staff in Singapore, in Moscow, in Ibiza, so globally. And in a nutshell, what we do is we arrange mortgages for wealthy individuals, typically more complex individuals who are looking to borrow money globally. So UK is a big market for us. But also we do a lot of lending in France, Paris, the Alps, south of France, here in Monaco, Spain and the Balearics. We have a couple of very interesting files going through at the moment in St. Bart's, in Bahamas, a couple in New York, in LA. So really anywhere globally where high net worth and ultra high net worth individuals are borrowing, we arrange finance for them, whether that be residential, commercial or development. Yeah, that's in a nutshell.
Terrific. Great to see the way you're growing the business internationally. But today we just wanted to talk about liquidity planning. I mean, in COVID, you've got, asset rich, high net worth clients with good businesses, trucking along, going well. We hit COVID and all of a sudden, wealthy clients are reviewing their asset base and looking at making sure they've got sufficient liquidity built into those holdings in order to either improve or manage their business or to refinance on assets they have. So perhaps give us a sense of what you're seeing from this area of liquidity planning as we headed into this crisis through March and through the summer and now where we are in the autumn.
Yeah, no, it's a fascinating subject, and certainly as you've alluded to, Isla and I are lucky enough to run what I believe is a well-run and certainly profitable business, and we're sitting on cash. But when everything kicked off in March, we had a quite serious look at each other, and you start wondering, what cash should we use for what, and certainly plans that you had get put on ice or re-reviewed at least. And I think we've seen within the high net worth community, people do exactly the same thing as ourselves. That cash becomes king more so than ever. It's an overused phrase. So what we've seen is quite an interesting polarization, if you like, of the sort of haves and have-nots. So I think there's been a lot of statistical analysis which has shown the wealth of the world's top billionaires has significantly increased in the past 6 months. And the reason being is obviously it's a huge opportunity. And these people have cash reserves. And I think they probably can be fairly bullish in this kind of market. And now that coupled with the fact that the actual cost of debt is very cheap at the moment. Down here in Monaco, you could borrow money for 5 or 10 years fixed at little more than 1%. Means that these guys are getting very aggressive. Now on the flip side of that, you have people maybe who have overextended themselves or have become reliant on credit, which is no longer readily available. And there's been a huge rush of those people towards monetizing their assets, if you like. Now, obviously, we sit primarily within the property space, but there has been some really heavy remortgage business and also a big shift, towards bridging short-term financing, grabbing that money quickly. Isla and I joke that now with a mortgage, you either have it's really easy and simple, or it's horrific. There's kind of no middle ground anymore. That kind of middle bit's been taken out. And I guess sort of if you don't fall into that really easy and quick bit and more this side, then bridging finance becomes increasingly important. And that's really, again, maybe where there's been a big polarization in the cost of capital. So again, for very credit-worthy, low loan to value, ironically, probably people that don't need the money, it's never been cheaper. Fixed money, as I said, 5-10 year, 1.2% here. In the UK, we're looking at a 5-year fixed rate on a loan of around 15.5 million, which is about 1.5%, which is incredibly cheap. No doubt that the best buy tables in the Times have lower rates, but for that big block of money, 15-20 million pounds, it's very, very appealing. I think one of the things, one of the things which we are looking for or have been looking at as a company is, what other assets do people have that we can monetize, that we can create liquidity from. We are primarily anchored in property, and mortgages is our thing. That's what we're known as sort of a world leader at. But certainly the vast number of our clients are entrepreneurial, often the CEOs of large public companies, or people that are heavily involved in companies that are public or are going public. So we've brought a couple of people in-house, and their pure focus is what we call securities-backed lending. So you obviously, David, from your private banking days, you'll be very familiar with this. But in a nutshell, what we are doing for people is creating liquidity, or creating Lombard loans is the most readily known phrase, but not against diversified portfolios, but against single lines of stock, often those which have low trading volumes, maybe are on an exchange which is not the London Stock Exchange, or even the AIM, which may be on the Saudi Stock Exchange, or a Canadian, or some of these smaller exchanges which normal banks or lenders would struggle to give any kind of loan to value against.
Okay, so that's interesting, because it's for a client then that has a wealth management relationship, but there is just this single stock. There's a need for liquidity, and it's something that an ordinary or even a high quality private bank just might not have the appetite for. In terms of the LTV or the cost of capital, they might not be able to add anything. So it's interesting to be able to, I guess, go from looking at property, but then also looking at financial assets. And then I guess there's also other assets. When I was working in banking, we had a client getting divorced who looked at lending against jewelry and fine art
absolutely.
And but the cost of borrowing didn't stack up in the end. But I mean, how do you see lending against other assets, supercars or other?
Well, I mean, certainly, supercars is an interesting one. The kind of the value of them is appreciated considerably, and it has classic cars, obviously, classic Ferraris or Bugattis or these kind of cars have long been a recognised asset against which people can lend. But increasingly, I think even these kind of very rare top-end supercars are now becoming very desirable and increasing considerably in value. So we were asked to look at a huge portfolio of supercars owned by a Kazakhstan client of ours. I think total about 60 or 70 million. And it was then, now that was what he was looking towards to raise liquidity from, rather than property. Obviously, planes and boats are something which long have been looked and lent against. So that's certainly something we have the capabilities for. And art increasingly is something we're seeing more and more of. A couple of the Luxembourgish funds that we work with are particularly strong in this area, and can create liquidity. So it's I think it is sort of the utilization, if you like, or the monetization of assets is becoming so important now, because I mean, the old adage of cash is king, or really the opportunity cost of not having that money available to you, if you are looking to take advantage of an opportunity in business or whatever it may be.
And I guess your inquiries can come from a variety of sources, like, for example, people running trust and fiduciary structures. They might have seen just a real fall off in income, and a structure with a lot of a large asset base with property and other assets that can be taken as collateral, or I guess tax advisors who an unforeseen tax bill has come up. There's not the liquidity. I mean, what are the kind of common intermediaries that you find that you and the team working with?
Yeah, so we have a very good relationship with a number of the private banks who don't lend from their own balance sheets. So a number of the large Swiss banks, a number of Middle Eastern banks who have very wealthy clients, and will get approached on a fairly regular basis for mortgages. Don't lend off their own balance sheet, but conversely don't want to say no to somebody and potentially have them walking down the road to a competitor. So yeah, we see a lot of business from those types of private client advisors. As you mentioned, the trust and fiduciary world. We opened the office in Jersey at the end of last year. Getting slightly confused. 2020 is a bit of a strange one. So I've sort of lost all concept of time. I think, yeah, just over a year ago. So obviously, yeah, the office there was to service very heavily the trust and fiduciary market. I think traditionally those trust and fiduciary companies have been reliant on maybe 3 or 4 local banks who probably between the 3 or 4 of them could have done whatever they needed. Whereas now I think, as I've mentioned, liquidity is tightening and they need something a bit more specialist off island, if you like, you know, for referring to Channel Islands. And lastly, we've been running 13 and a half years now. And we register probably 200 to 300 new lending inquiries a month, and the compound effect on that with existing clients and referrals is huge. It sounds cliched, and obviously on LinkedIn, where you and I really properly got speaking and got to know each other. That's an overused phrase, but it really is the truth. I think in the private client world at the moment, whether it be for good reasons or bad reasons, there is opportunity and there are people making moves. Enness, I guess, wants to be that water cooler in the drought and create that liquidity where possible.
Well, thanks, Hugh. And just finally, I mean, everyone has a view on the London property market. I mean, as we go into 2021, what's your feeling for how London residential property is going to hold up? Do you have a crystal ball?
Right, I tell people I do, look, I am a continual bull on the London property market. We started Enness in August 2007, when a week later or 2 weeks later, Northern Rock crashed, and I've been told continually from that date forward that the bubble is going to burst, property is going to fall to pieces, and it's done nothing but defy logic, defy any kind of reasoning. The honest truth, the market should be terrible at the moment. We went through one of the oddest times in history. There were 0 transactions, or maybe 1 or 2, for a month or 2, probably in the whole of prime and super prime London. But the demand doesn't abate. It really is that kind of safe haven for property. Even with increased stamp duty, even with further increased stamp duty next April, is it? I think the additional 2% for foreign buyers. Whatever it be, all the different changes, it's still a relatively cheap market to enter. In terms of cost, it's a relatively cheap market to hold property in longer term. Not here in Monaco, but across the border in France, you have wealth tax ongoing, the same in Spain and other countries. And people buy in London because it's got a stable political system, a stable legal system, and a stable banking system. 3 reasons purely, and it's quite nice. It's a nice place to do a bit of shopping in the summer if you're in the Middle East, or Christmas if it's -50 in Russia or wherever. So I'm not betting against it, and certainly I do put my money where my mouth is when it comes to London property. I'm heavily invested myself and tell my clients to, and have done for years. So long may it continue.
Brilliant. Well, great to chat today. Any PCD members who have clients looking at liquidity options, considering their full asset base, do reach out to Hugh or Enness and the team, and they will be delighted to help. So thanks for talking today, Hugh, and hope you have a nice evening.
Super. Thanks, David. Likewise. Cheers to that.